Closing stock at the end of the year is 36,000. Depreciation at 10%. All cash received by branch is daily remitted to head office. This sentence. So what are the opening balances are? Opening stock, opening debtor, opening petty cash, opening furniture, opening prepaid. Hello, my dear student. I am Dr. B.S. Subramanian, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. This session, I am going to hand Financial Accounting 2, second semester, Unit 1, Session 4, in favor of branch accounts. So, in public examination, so they are going to ask two questions. One question, 10 marks. One question for 15 marks. I will repeat. They are going to ask two questions. One question for 10 marks, another question for 15 marks. 10 question without invoice. 15 marks question with invoice. So what is the difference between invoice means which includes the profit. 10 marks without invoice means no profit will be included. So when you say word called without invoice means no profit will be included, whereas the invoice cost plus profit will be included. So we'll move on to now problem number 4. The head office in Bengaluru invoice goods to his branch at Mysuru. This is the branch Mysuru at cost plus 20%. This is important. All cash received by branch is daily remitted to head office. This sentence. So the goods are sent at cost plus 20%. If the cost is 100, profit is 20, 120 is called the invoice spread. So they have got a head office in Bangalore, having a branch in Mysuru. What? Here this no, all cash received by the branch daily should be remitted to head office. Whatever the amount received daily, that should be remitted to head office. They can't retain the cash. This is a transaction between the head office and the branch. Branch has to send whatever the transaction is there. And all the expense of the branch, see that? All the expense of the branch is paid by the head office only. Whatever the expenditure the branch has to make, that is paid by the head office. So we'll move on to problem now. So problem say, opening stock 60,000, opening debtor 50,000, opening furniture 12,000, goods returned to head office. So whatever the goods sent returned by the branch to head office 12,000, discount allowed goes to debtor account, goods invoiced to head office means goods sent by the head office to branch account, credit sale goes to the debtor account, remittance to head office, cash sale, cash received from the debtor, this will come credit side of the branch account, check received from head office, the expenses of the branch met by the head office for sake of salary, for the sake of rent, for the sake of miscellaneous pay, for the sake of stock. Here, no, these are all the expenditure met by head office. These are all the expenses met by the head office. Closing stock at the end of the year is 36,000. Depreciation at 10%. So, how the branch account starts now? All the opening balances will come on the debit side. So what are the opening balances are? Opening stock, opening debtor, opening petty cash, opening furniture, opening prepaid. So opening balances of assets we said. What are the opening balance of asset? One is the stock, one is the debtor, one is the petty cash, one is the furniture, one is the closing balance. So I will repeat. One is the stock, one is the debtor, one is the furniture, one is the petty cash, one is the prepaid. Then goods sent to branch account by the head office. Then two bank account, expense of the branch met by the head office. Then come back to credit side by opening balance of liability, outstanding salary or outstanding rent. Then by bank account, cash sale. So by bank account, cash sale, cash received from the debtor. Then by closing balance, what are the closing balance are? We have got a stock, we have got a debtor, we have got a furniture, we have got a prepaid expenses, we have got a petty cash. All the closing balance should come. Same thing, one is the stock, one is the return, one is the furniture, one is the prepaid rent, whatever you have got. One opening stock, closing stock, one opening return, one closing return, one opening furniture, closing furniture, one opening petty cash, closing petty, and whether the prepaid may come, may not come. Then you have to calculate the stock reserve. Opening stock at invoice price, stock reserve on the credit side. Goods sent to branch debit side, stock reserve on the credit side. Goods returned to the head office credit side, stock reserve debit side. Closing stock on the credit side, stock reserve on the debit side. I will repeat. You have to calculate the stock reserve. How to calculate the stock reserve? I am going to explain. Here, goods are sent at cost plus 20%, that is rate plus 100 plus rate. Here, according to problem, the percentage is 20. 20 divided by 100 plus 20. This is 20 by 120 is equal to 1 by C. So you have to calculate the stock reserve, or we say loading, we say, for 4 items. One opening stock, one closing stock, one goods sent to branch, one goods returned by the branch. Which are the 4 items are? One is the opening stock, one is the closing stock, one goods sent to branch, one goods returned by the branch. So what's your opening stock here? 60,000. 1 by 6 of 60,000 is 10,000. Where goods sent to branch is 1,80,000. 1 by 6 of 1,80,000 is 30,000. On goods returned to head office is 12,000. 1 by 6 of 12,000 is 2,000. Closing stock is 36,000. 1 by 6 of 36,000 is 6,000. That in examination, we have to calculate like this. One non-opening stock, one non-closing stock, one goods sent to branch, one goods returned by the branch. How it will be? Like the here, opening stock, stock reserve. Goods sent to branch, stock reserve. Goods returned to head office, stock reserve. By closing stock, stock reserve. 4 items, load. Somebody says loading also. Which are the 4 items are? Opening stock, closing stock, goods sent to branch, goods returned by the branch. How it will be dealt? Opening stock, stock reserve. Goods sent to branch, stock reserve. Goods returned to head office, stock reserve. Closing stock, stock reserve. Okay, I think you can understand this point. Then, so if you see the problem now, you got a opening debtor 50,000 is there. Then, so a debtor account is prepared to find out the cash receipt from the debtor or closing debtor. If you see that opening debtor is there, then see that credit side cash receipt from debtor is also there, salary paid, but there is no closing debtor. When there is no closing debtor, we have to prepare the debtor account. First, you see that have you got the closing debtor? If you do not have the closing debtor, you have to prepare the closing debtor account. So, how to prepare the closing debtor account? See that. At the beginning of the year, we have to receive 50,000. See that question? At the beginning of the year, we have to receive 50,000. During the year, credit sale is 1,80,000. So, total amount to be received is 2,30,000 to be received. Out of 2,30,000, how much cash received? 1,30,000. There is no bad debt. Discount allowed is 2,500. This is written by customer sales return is there. So out of this 2,30,000, if you deduct the 1 lakh, the balance is 97,500. This is closing balance. So it will appear in the branch account. If you prepare the branch account, how I told you, opening them. What are the opening balance of asset? Opening stock 60,000, opening debtor 50,000, opening furniture 12,000. The total amount available is 1,22,000. We have sent the goods to branch 1,80,000. This is the goods sent by the head office to branch account. These are all the expenses met by the head office on behalf of the branch. The expenditures are salary 60,000, rent 20,000, miscellaneous or other expenses 1,000, totally 81,000. Come back to credit side. By opening balance of liability, there is no opening balance of liability. Come back, By bank account, this is the amount remitted by the branch to the head office. One is the cash sale, one is the cash received from debtor. Totally 2,10,000 is remitted by the branch to the head office. Now come back to goods returned to head office. Some of the goods is not up to the mark. It's the goods returned by the branch to head office. Closing balance. You got opening stock is given, closing stock is then opening debtor, closing debtor we calculated. Your furniture value is how much? 12,000. 10% of furniture is 1,200. Amount available is 10,800. If we add all this, it will come to 1,44,300. Now, I told you regarding the stock reserve, which are the 4 items on one on opening stock, one on goods sent to branch, one on goods, this is a goods returned to the header, this one. Then one on closing stock. Which are the 4 items? One is opening stock, goods sent to branch, one is goods returned by the branch to head office on closing stock. The stock reserve of this will come on the credit side. See that opening stock, stock reserve, we say this loading also. Stock reserve, one on opening stock, one goods sent to branch. Come back here. A stock reserve on goods returned 2,000, on closing stock 6,000. Then if we add the figure, totally it will come 4,06,300. The difference is 15,300 is the profit of that branch, will be sent by branch to head office. I will repeat. Start with opening balance. One is opening stock, opening debtor, opening furniture. It will come 1,22,000. Goods sent to branch 1,80,000. Bank account. This is the expenses made by head office on behalf of the branch for salary, for rent, for other expenses. Totally 81,000. Opening balance of liability. There is no opening balance of liability. By bank account, cash sale, cash received from debtor 2,10,000. Goods returned to head office 12,000. Then by closing balance, so here opening stock, closing debtor, opening debtor, closing debtor we already calculated. Opening furniture, depreciation 10% means 1,200. Balance is 10,800. We add 1,44,300. Now we have to calculate stock reserve. One on opening stock, one on closing stock, one goods sent to branch, one goods returned by the branch. Stock reserve or loading, one on opening stock, one goods sent to branch, one on goods returned, one on closing stock. The difference will come 15,300, which is the profit of this branch, because the head office may have so many branches are there. Here we got 15,300. This is the profit of the branch sent by the branch to head office. Okay, I have explained. So very, very simple. Only complicated is profit. You have to calculate the profit. That is called the stock reserve. Some lectures may say it's a loading also. So one on opening stock, one on closing stock, one goods sent to branch, one goods returned by the head of branch to head office. How the stock reserve will work? Rate 100 plus rate. If say 20 at cost plus 20 means 20 by 120. If it's 25%, 25 by 125, that's all. You have to calculate one opening stock, stock reserve. Goods sent to branch, stock reserve. Goods returned to head office, stock reserve. Closing stock, stock reserve. I think you understand this. Very, very simple. 15 marks compulsory question. 110 marks, 115 marks. So 15 plus 10, 25 marks. And here 2 theory question, 2 marks will also come. So 25 plus 2 means 27 marks already here. So totally you have to score 40 marks. So 21 paper minimum is 21 balance in the internal law, so that we can easily score. Then we can move on to departmental account. If we solve one in the next session, we'll have one more problem on this branch account through invoicing. Till then, goodbye. Meet in the next session with another problem. Till that day, Hope you understand the problem. We'll have detail in the next session also. We'll have one more problem on the invoice page. Till then, goodbye. Meet in the next class.